But most basketball players, most professional athletes, they only think about the thing that's in front of them, and then they have no thought of what's going to come after that sport ends, when their career ends, because they're making millions, making tens of millions, and that seems like a lot of money until you strip out all the taxes, all the agent fees, all the other things that go along with it, all the partying, all the nice houses, all the nice cars, and you try to extrapolate that over 50 years. And the sad thing is that like most professional athletes end up poor again because they didn't understand that $50 million is not a lot of money when you're living a certain lifestyle and you're expecting that to carry you for the next 50 years, right? And so that's unfortunately the more common story, the stories of Shaq, who goes on, who recognizes, okay, my career is going to end. I made a lot of money, but what do I do with that money? How do I transition into becoming an owner, an investor? And now he's a super stud in that way, but like the number of success stories that you can look to where it's like, oh, that superstar in that sport transitioned into business and made good money. Most of the times, because what happens is it depends on who they're surrounded with in a lot of cases, but a lot of it is also that individual's like proclivities. Shaq's just a really smart dude. Like he's surprisingly sharp. Like that might be like rude to say, but like he's just a really smart guy. He's not just a really good basketball player. He's not just a giant, but he's like very thoughtful and so a lot of those guys, they might want to make that transition, but they'll do it poorly, and they'll get themselves surrounded with somebody where it's like pretty much every professional athlete has a story of like losing millions of dollars investing in their cousin's restaurant or something, or some shit like that, right? Like my brother had this thing that he wanted me to fund, so I became an investor in the thing, and he lost tons of money on it. It's like that's the more common narrative. So Shaq doing that with a bunch of franchises is the outlier, where you look at it and you're like, oh, why don't more people do that? It's like, well, because it's a different skill set. It's a different mindset, and he was able to pivot, make that adjustment. Same with actors, right? You look at The Rock, you look at Ryan Reynolds, right? And it's like those guys figured out how to make money and like transition their fame into eyeballs on a product. And a lot of people try that, but they do it through their own endorsements and like, oh, I'm going to be an endorsement for Pepsi, but they don't own the company. Where Ryan Reynolds and where The Rock and, these people who are now billionaires, they recognized, oh, I'm not going to become a billionaire off of endorsements. I'm going to become a billionaire off of owning the product that I endorse. And so then they have their tequilas, and they have, their cell phone service, and they have all these different products that they're co-owners in, so that as they're pimping that thing, they're also getting the equity boost on the back end. So that's a different, it seems so obvious, and yet it's quite difficult to execute at that level because there's so many opportunities being thrown at these guys. Maybe that's the bigger issue, is it's like death by opportunity. You have 1,000 opportunities to choose from, so your likelihood of choosing a good one is bad. It is very low, right? Because like your success is probably going to be dependent on the people that you put into place. And why do you have that skill? Like, what makes you confident that you're a good people picker now, right? And so most of the time, unfortunately, those guys, they lose a ton of money because they picked the wrong person. They picked their homie, their buddy, their guy that they've known forever, that they trust. And then that guy is either really shitty or really shady. Or worst case, he's shitty and shady. And then it's like, oh, you got completely wiped out. That guy took him for everything, right? So it's like, that's very common. Business is hard, I think. I was reflecting on this the other day because there's a big narrative in the last couple of years. I think Cody Sanchez has done a lot in this area of business acquisition and saying you should buy, not build. It's better just to go buy a business. And I've done a video on this before too. And there's a lot of like merit behind that. But the problem really comes down to like the only way to learn how to ride a bike is to ride a bike. The only way to learn how to build a business is to build a business. It's very dangerous to give somebody a super powered motocross bike to learn how to ride the first time. Yeah. And that's kind of what's happened when you go and you buy a business. And because you're going in there, you might know a lot of the mechanics. You might technically know how the thing works from having read the manual or having ridden a smaller thing maybe in the past in some kind of way, but like you don't really understand the machine. And so then the idea that like you could step into that machine that is already super powered compared to your capacity, and there's something wrong with it. And there's something wrong with it because that's why you bought it. Because there's a room for improvement. There's something that you thought you could do better. You don't just buy a business based off its current financials and say, let's keep it here and let's let it run. Like you go in there like there's something wrong that we can make better. So you have a motorcycle that you're not qualified to ride, and there's something wrong with it that you think you can fix. And it's like there's a lot of hubris there, kind of to think that you can do that. And I had a phone call yesterday with a friend who a number of years ago he went down that path. They acquired a company, and he's been in that business for the last 3 years, and now they're closing up shop. He's filing bankruptcy because he's like, some things I didn't know at the time, like going into it, we were overpaying. I didn't realize how much we were overpaying. And once you're behind that 8 ball, it's really hard to get caught back up. Second, I didn't understand that demographic of blue collar workers and how they're very hard to motivate, how they always want this, that, and that it's very hard to have the talent pool, and how do you train them and how do you execute? Like I underestimated how hard that would be. And then I underestimated, the market and how easy it would be to get so all the things that you could possibly like underestimate, like you underestimate it simultaneously. And then you have the looming issue of debt on the top of that, because you probably took out debt to acquire the thing. So now you have these payments that you have to make. And so all of that compounds. And what I've seen is that a lot of people who go down that acquisition route, they end up failing. Yeah. They just end up failing because the reality is like you're probably going to fail at your first business. You're probably going to fail at your second business, maybe even your third business. But like you keep doing that, you learn things, and you keep like plugging that onto the machine, and then eventually you figure it out, right? But you don't want to just try and figure it out on a machine that can kill you the first time. You kind of want to try and figure it out on like a tricycle first. Okay, my lemonade stand. Okay, it didn't really work, but here I learned some things. Okay, next time I'm gonna do this thing. Oh, now I have a bigger lemonade stand, right? Like, and you build that way, and you as the entrepreneur build up the skills that you need to then be successful and have the ability to ride that bigger motorcycle. But like, there's just a lot of like, I'm guilty of this with the content that we create, of casting a picture that entrepreneurship is easier than it is in reality. And so it gives people the false hope that, all I need to do is step in there and I'll fix that business. Right. And so they think the hard part is acquiring the deal, because like 1, you have to get the deal. 2, you have to operate the deal. 3rd, you have to like actually profit from the deal. But everybody, like the first hurdle everybody has to get over is actually getting the deal. Yeah. And because that's so hard and it takes a long time, and you probably lack resources and connections that make it easier, that's the part that then feels like a victory once you've done it. Like, I spent 3 years trying to find this business. I finally found it. I got seller financing. I closed on the deal. Huzzah, I won. Finally. And it feels like a victory. And it's like, no. Now you've just bought your ticket to now step into the arena and get mauled by the tiger. That's all you've done, is like, you've now like, they've opened the gate and they say, welcome in. Like, and if you knew what was waiting for you on the other side of that, you wouldn't celebrate. You wouldn't be celebrating and being like, that felt good. Like, because you're about to get your face ripped off, regardless of like how good you are at it. Like you're fighting a tiger. So like, even if you're like the best tiger fighter in the world, like you might be confident you're going to win, but you're still going to get scratched up a bit. Right. And so like, I think that's a big issue. And going back to like the professional sports athletes, again, it's like a different skill, different mindset. And just because you're really dominant at this one domain doesn't mean it's going to transfer and be successful over here. But again, like there's a lot of money to be made from people selling you on that dream of like entrepreneurship. And I'm guilty of this too. Like I coach entrepreneurs on how to build businesses so they can avoid a lot of scars that I have inflicted on myself. And I just try to be really realistic with people, is like, your first business, if it's an acquisition, is a really dumb idea. Like, genuinely, I think you're probably going to just get your face ripped off. And you're probably better off just trying to go build your first thing and use your money, use your effort, use your elbow grease, and build it slowly. Take your licks. It's going to take a while. It's not going to make you rich quick. But more important than what you're building there is who you're becoming in the process. And you're becoming the person that is capable of riding that super bike in the future and fixing it while riding it. Right. And then you can go use that to acquire businesses and like take off. But the game of business is hard. I just think everybody should know that going in. It's worth it for the right personality, right individual. But for a lot of sports guys, honestly, I think they're probably better off staying out of business. And they're probably like, they have the money. They just need to learn how to live below their means and invest it. you got $50 million over like a 10-year career. Like that can last you the next 50 years. That can last you indefinitely if you invest it and you live a life in alignment with that dollar amount. Right. And that's less than what they probably are willing to do. Right. Like if you think about like, okay, if you could earn 5% interest on $50 million a year, and that like 5% is maybe around a treasury bill or something like really low risk, like you could maybe, put it in the stock market and get like 10% and safe investments. But like that 50 million would allow you to live, off of $2.5 million a year, just the interest from 4 or 5%. That's a pretty good lifestyle. Right. But like, if you're living a $10 million lifestyle, then you're eating in every single year into the 2.5 that you made from the interest plus another 7.5. So it's only like 6 years until you've eaten into all the principal. And it's like, you don't live a $10 million lifestyle. Hell, honestly, probably don't even need to live a $2.5 million. That's a crazy lifestyle. It's like a genuinely crazy lifestyle to spend $2.5 million a year. Like you're really working to spend that money at that point. Like you got to be trying to spend it. And so like, it's all like wealth is the ratio between what you make and what you keep, or like what you make and what you spend. So if you've made a lot, just decrease what you're spending and you'll have that bigger gap. But business is hard. Now, if you're trying to build wealth and you don't have that 50 million, you don't have like a physical skill that's going to get you there, and you want to make 50 million, entrepreneurship is the way to get there. It's pretty much the only other way to get there, right? Like, I would qualify like professional athletics as like winning the lottery. Like they work really hard. Not to take away from them, but they won a genetic lottery, and they also won just like the life lottery. Like, and if that's not you, then pretty much the only other way to ensure that you're going to like easily to make 50 million a year or in a lifetime would be entrepreneurship. Now, if you wanted to make just 5 to 10 million, this podcast episode is like rambling across a lot of different topics right now, but it's interesting, hopefully. Is if you want to live a life, if you want to have like a $5 to $10 million net worth, which I think is actually very achievable and a really good life. Like 5 to 10 million, if that might seem like for some people like an incredible amount of money, but for most people that's pretty doable with the right investment strategies, with the right earning strategies, with the right saving strategies, and you would live a pretty dope life. Because again, like 5% off of 5 million a year is like $250,000 a year, right? That's like $20,000, a little bit less than $20,000 a month to live off of. That's pretty damn good, right? And I just think people, they think, oh, I want $1 billion or I want financial freedom. What's financial freedom mean? Like they have these big numbers in their mind. It's like, no, it's pretty close, like 5 million. And for somebody out there listening, they're probably like, 5 million feels impossibly far away. And I'm like, I'm telling you, it's not. It's closer than you think. But you don't necessarily need to be an entrepreneur to get to 5 million. Honestly, if probably the safest, easiest route to 5 million a year would be like medical device sales or SaaS sales, business, like some kind of high ticket sales. You do that, you can get to 5 million pretty quickly with fairly low risk because you get all the upside of the commission and it's based off of like the output of your inputs, but you don't really stand to lose anything if it doesn't work. It's like, whereas on entrepreneurship, you're building the thing, you have unlimited upside, but you could always go to zero, right? So it's like, that sucks. So don't know if this podcast is helpful for anybody. We covered a lot of topics here. Let me know in the comments if there was a particular topic that you found interesting. And I appreciate you guys being here. We'll catch you in the next episode. Get out of here. Get out of here, you people.